Hey guys, and welcome back to the channel. Today we are living in some strange times. Off the back of the pandemic, the cost of living is skyrocketing. Many households are being forced to make some difficult decisions, ones that many didn't think they'd ever have to make. Tax is likely to be your biggest expense throughout your lifetime. There is no escaping it. So I wanted to do a video to give you some examples of how you can avoid paying tax, legally of course. This ultimately means more money in your pocket in a time where we could all do with that little bit extra. Before we get going though, if you get any value from this video, please subscribe to the channel and hit the bell icon to be notified when I release future videos. Tax is everywhere. It comes under many names and tries to disguise itself. You pay VAT when you put fuel in your car to get to work. Then you pay income tax and national insurance when you get paid from your employer. You get taxed again when you buy things with your income or invest your money. Then you get taxed again when you die. There is just no escaping it. The government is very sneaky when it comes to taxing you. They often don't even call taxes tax. I read a great book last year by James Manham called What Everybody Needs to Know About Tax, an Introduction to the UK Tax System. And don't be put off with the dry name of the book. It's very insightful. It's also very short, only 168 pages. And to summarise, James talks about how the UK tax system is just so complex that nobody really understands it. And he states that the purpose of the book isn't to save you money, it's to get you knowledgeable and get you aware of something he calls stealth taxes in the UK. The taxes that you probably haven't even considered are taxes, but they are. He breaks the book down into 3 golden rules. Rule number 1 is lots of small taxes together add up to make big tax bills. Rule number 2, no matter whose name is on the bill, all taxes are ultimately suffered by you, the human being. And rule 3, taxes are kept as invisible as possible. Now these rules strike a chord with a famous quote from Jean-Baptiste Colbert, who was the finance minister to Louis XIV. He said, "The art of taxation consists in so plucking the goose as to obtain the largest possible amount of feathers with the smallest possible amount of hissing." Essentially, the government wants to take as much money from you, the taxpayers, with the least amount of fuss. And the best way to do that is to have hidden taxes that aren't even called taxes to distract you. A couple examples of hidden or stealth taxes would be VAT or national insurance, and there's plenty more. And the truth is, these are just as much tax as council tax, but studies show that people complain less about these taxes, which is why the government use them to their advantage. Everything in this video is legal. In fact, many of them are schemes backed by the government. You just may not know about them. So let's make a clear distinction. Tax evasion is different from avoidance, so let's be very clear on that. Tax evasion is illegal, and you can find yourself getting into a lot of trouble if you do that. So, don't do it. Examples of tax evasion would be underreporting your profits or deliberately attempting to not pay tax when it's due. Of course, that is not something that I advocate. What I do advocate though is not paying any more tax than you legally need to. The reality is, in a functioning society, we need to pay taxes for all the public services that we already benefit from. Don't get me wrong, there are many flaws in the public sector. There isn't a country in the world that's perfect. But the services we do pay for from our taxes really are top notch. Okay, so the first way that you can avoid tax is to utilise your ISA allowance or your individual savings account allowance. In particular, the stocks and shares ISA, the lifetime ISA or the help to buy ISA, as opposed to the cash ISA because the interest is just pitiful. For the 2022 and 2023 tax year, you have an allowance of £20,000 that you can spread across all of your ISAs, and any interest or growth on that money will be tax-free forever. On a side note, the £20,000 allowance has remained the same now for the 6th year in a row, which could in itself be considered as a stealth tax. It's important to remember that this is a total allowance, and if you have more than one ISA, you're going to need to track how much you're spending because it's spread across all of them. For most people, this shouldn't be an issue as the 20k allowance works out to be nearly £1,700 a month, nowhere near what the majority can stash away or invest. Now, a stocks and shares ISA allows you to invest your money in the stock market in a tax efficient way. You will not be taxed on any growth from your portfolio, and you're not going to be subjected to capital gains tax when you sell an investment at any point in the future. regardless of how big your pot of money grows. The beauty of this ISA is that you can access your money at any time by just selling any investments as needed. Now, the lifetime ISA allowance allows you to save up to £4,000 a year into it. And if you do hit the 4K allowance, the government will top up your ISA by £1,000, making it a guaranteed 25% return. This is literally free money. The downside to this account being that you can only use it to purchase a first home or for retirement. You can't access it until you do retire. And if you were to withdraw any money sooner, you would lose all the money that the government has topped up for you. It's important to note that the government top up does not count towards your annual ISA allowance. Next up, we have your pension. Pensions are a pretty dry and boring subject, but they are one of the best ways to ensure that you pay as little tax as possible. Now, pensions usually come in two forms: the workplace pension or a SIP, or a self-invested personal pension. Pensions are very complex, so I'm not going to go into the details of them, but I'm just going to let you know the benefits of utilising them. Pensions allow you to invest your money pre-tax. This is done for most people in the form of a workplace pension, where your employer legally has to provide one for you. You will sacrifice a certain percentage of your pre-tax wage, and your employer will also contribute, sometimes matching what you put in, again, free money. This effectively lowers your tax bill as you're actually investing before you get taxed rather than after. You do get taxed when you withdraw money in the future, but you've gained the benefit of having more money to accumulate a bigger pot over time, and you will then actually end up with more money in your pocket. If you are self-employed, you can have a director's pension if you have a limited company, or you can invest your money with after-tax cash, and the government will top up your SIP in the form of tax relief, basically refunding you the tax that you've paid. Thirdly, and one that isn't talked about much, is the side hustle allowance. Now, this allowance is broken down into two separate allowances: the trading allowance and the property allowance. Both let you earn up to £1,000 of trading or property income each financial tax year and not pay any tax on this income. You don't even need to let the tax man know you're making this money. If your income from these sources exceeds these limits, then you will have to register for self-assessment and let HMRC know. The trading allowance was introduced originally for people selling things on sites like eBay, but it now covers the sale of goods or services, so you could pretty much do anything from selling soap to being a blogger or even cutting grass. The property allowance would allow you to rent your property out using sites like Airbnb, or renting out your driveway or parking spot. It's important to remember that the £1,000 allowance here isn't net profit, it's revenue. So be careful not to spill over, and if you do, you're going to need to fill out a self-assessment. But if in doubt, please talk to an accountant. Okay, and then we have the dividend tax allowance. So you may get a dividend payment if you own shares in a company. A dividend is a portion of profits given to the shareholders of a company, and is something that you can benefit from alongside any growth of a stock. Big companies that pay shareholder dividends include Coca-Cola, Johnson & Johnson, and British American Tobacco. You can earn some dividend income each year without paying any tax at all. So the personal dividend allowance used to be £5,000 a year back in 2018. However, it was reduced to £2,000 a year. Again, another stealth tax. So this also works if you're the director of a limited company. So a portion of my take-home pay is from dividends from my own company alongside a salary. So it's a great way to minimize your tax bill. Again, I am not a financial professional, so please speak to an accountant if you need more information or help with this. And lastly, you can make use of your capital gains allowance, which currently sits at £12,300 per year per person. This allowance lets you sell off assets, so anything that goes up in value, including property or stocks, tax-free up until £12,300, where you will then begin to start paying tax. Do note though that this allowance is only for the gain. So if you bought a stock 5 years ago for £10,000 and it's now worth £22,300, you could sell or realise that gain, selling off £12,300 completely tax-free, leaving your initial investment of £10,000 that can then in turn grow again. So this can be used as a supplementary method over time to boost your income without needing to touch your initial investment. This is just another tool in the toolbox to help you lower your overall tax bill. This allowance, and truthfully many of the others, are in the realm of financial advisors and planners. It's what they do day in and day out. And if your situation is complex, or to be honest, even if it isn't and you just want clarification, you need to talk to a financial professional, as you could save a ton of money by utilising them. So I hope this video gave you something to think about when it comes to paying your taxes and the ways that you can avoid paying too much. Try to spot stealth taxes in everyday life now. Sadly, you're probably going to see it everywhere. Thanks again for watching the video, guys. Please remember to hit the like button. If you got anything out of it, subscribe to the channel. See you next time.